Beloved seekers of truth, dear family of thoughtful investors, I warned you years ago, when everyone was losing their minds, when the fever was at its peak, when people were mortgaging their homes and draining their retirement accounts to buy something they didn't understand. I warned you, not because I'm a prophet, not because I can see the future, but because I've seen this story before. I've watched it play out in different costumes, different names, different promises, but always the same ending. And now, as I watch the aftermath, as I see the devastation in people's eyes, as I hear the stories of life savings vanished into digital vapor, I feel no satisfaction, only sadness, because the truth is this didn't have to happen. None of it had to happen. Let me take you back to 2017. The world had gone mad. Bitcoin was soaring, every new all-time high. Every week, another story of someone becoming a millionaire overnight. Your coworker who bought Bitcoin at $100,000. Now it was a $10,000, then $15,000, then a $19,000, and your nephew who'd been struggling to find direction. Suddenly he was a crypto expert, telling everyone at Thanksgiving dinner how the old financial system was finished. Your neighbor who'd never invested $1 in his life. Now he was trading cryptocurrencies on his phone, showing you his portfolio, up 500% in 3 months. Everyone was getting rich, everyone except you. And that feeling, that sick feeling in your stomach, that fear of missing out, that terror that you were being left behind while everyone else was boarding the rocket to wealth, that feeling was so powerful, so overwhelming, that intelligent people, good people, people who should have known better, they abandoned everything they knew about investing. Too, I remember receiving letters, emails, questions at conferences. What do you think about Bitcoin? Should I invest in cryptocurrency? Am I missing the opportunity of a lifetime? And I said clearly, simply without hesitation, stay away. Not because I'm against innovation, not because I don't understand technology, but because Bitcoin wasn't an investment. It was a speculation, a bet, a gamble dressed up in the language of revolution. Too, but people didn't want to hear that because I was old. I was traditional. I didn't understand the new paradigm. This time was different, they said. The blockchain was revolutionary, they said. Fiat currency was dying, they said. And maybe they were right and I was wrong. Maybe this old man had finally lost touch with reality. Maybe the world had changed and I just couldn't see it. That's what the fever does. It makes doubt feel like wisdom and wisdom feel like fear. Let me tell you about a young man I knew. 28 years old, smart, hardworking. Saved $50,000 over 5 years. That money, it represented everything, every sacrifice, every overtime shift, every vacation not taken. He came to me in late 2017. His eyes were bright with excitement. I'm going to put it all in Bitcoin, he said. This is my chance. This is how I get ahead. I asked him a simple question. Do you understand what you're buying? It's digital currency, he said. It's going to replace the dollar. It's the future of money. But how does it work? I asked. How does it create value? What gives it worth? He paused. It's based on the blockchain. It's decentralized. Nobody controls it. But what does it do? I pressed. If I own a share of Coca-Cola, I own a piece of a company that sells billions of dollars of beverages every year. If I own Bitcoin, what do I own? He looked confused, frustrated. You don't understand, he said. This is different. The value comes from scarcity and demand, so it's worth what someone else will pay for it. Yes. And when they stop paying more, what happens to your investment? He didn't have an answer. Too, I begged him not to do it. I told him invest that $50,000 in boring index funds, in dividend-paying stocks, in real businesses that create real value. You'll get rich, I promised. Not overnight, but steadily, certainly over decades. But he didn't listen, because I was promising him 8% a year when Bitcoin had returned 800% that year. I was promising him wealth in 30 years when Bitcoin was promising wealth in 30 days. He bought Bitcoin at 18,000. 6 weeks later, it hit 19,500. He felt like a genius, then it crashed. By February 2018, Bitcoin was at 6,000. His 50,000 had become 16,000. He held on. Everyone said it would come back. They said to buy the dip. They said this was the opportunity. It fell to 3,000. His 50,000 was now worth 8,000. He sold, devastated, destroyed. 5 years of savings gone. Some of you are thinking, but Bitcoin came back. It went to 60,000. He should have held. And you're missing the point entirely. Because that young man, he couldn't hold. Not because he was weak, but because he needed that money. He wasn't some billionaire playing with extra cash. He was a regular person with bills and life and emergencies. And when his car broke down, when his mother got sick, when life happened, he had to sell. At the worst possible time, at a devastating loss. That's what happens when you speculate with money you can't afford to lose. Let me tell you what I've learned in over 70 years of investing. Real wealth isn't built by betting on the next big thing. Real wealth is built by understanding value and patiently accumulating it over decades. It's boring, unglamorous. There are no parties celebrating your 8% annual return, but it works every single time. Here's what Bitcoin represented and represents still. It's not an investment. It's not a currency. It's not a store of value. It's a psychological phenomenon. It's humanity's eternal desire to get rich quickly without working for it. It's the same impulse that drove the tulip mania in 1637, the same impulse that drove the South Sea bubble in 1720, the same impulse that drove the dot-com bubble in 2000, the same impulse that drives every bubble in every generation, in every form. The belief that this time is different, that we've discovered a new path to wealth that doesn't require patience, discipline, or understanding, that we can buy something today and sell it tomorrow for more, simply because someone else will pay more forever. But it never works that way, because eventually the music stops. Eventually there are no more buyers. Eventually people realize they're holding something that produces nothing, creates nothing, pays nothing, and the price collapses. Not to zero necessarily, maybe not even for long, but enough to destroy the people who bought at the peak, the people who leveraged their homes, the people who borrowed money, the people who put in everything they had because they couldn't stand watching everyone else get rich. I've received thousands of messages over the years from people who lost everything in Bitcoin, from people who are now in debt because they bought with money they didn't have, from people whose marriages ended because one spouse gambled away the family savings, from people who will never financially recover from believing the hype. And every time, every single time, they say the same thing: I should have listened to you. But here's what breaks my heart. It's not just the money they lost. It's the time. That young man who lost to 42,000 in Bitcoin, if he'd invested that 50,000 in a simple index fund in 2017, by 2024 it would be worth about 120,000. He'd have more than doubled his money. He'd be on track for a comfortable retirement. Instead, he's starting over at age 35. He lost 7 years. 7 years of compound growth he can never get back. Time is the one asset you cannot buy, borrow, or recover. When you waste it chasing fantasies, it's gone forever. This is what the Bitcoin promoters never tell you. They talk about the people who got rich, the early adopters who bought at 100 and sold at 50 Zalozen. But they don't talk about the millions who bought high and sold low. They don't talk about the lives destroyed. They don't talk about the opportunity cost. Let me be very clear about something. I'm not against blockchain technology. I'm not against innovation. I'm not some Luddite who rejects change. I've spent my entire life studying businesses, learning about new technologies, adapting to change. But I can distinguish between real innovation and speculative mania. Blockchain might have legitimate uses. Maybe it will revolutionize certain industries. But that doesn't make Bitcoin a good investment. Just like the internet was revolutionary, but that didn't make pets a good investment. Just like railroads were revolutionary, but that didn't make every railroad stock a good investment. The technology and the investment are not the same thing. You can believe blockchain is important, while also believing Bitcoin is a terrible place to put your money. These are not contradictory positions. They're the position of someone who understands the difference between innovation and valuation. Here's what I want you to understand. Every generation faces its own version of this temptation. For your grandparents, it was gold mines and penny stocks. For your parents, it was .com stocks and real estate flips. For you, it's been Bitcoin and cryptocurrencies. For your children, it will be something else. Some new thing that promises instant wealth without effort. And the story will always be the same. This time is different. The old rules don't apply. You're going to miss out if you don't get in now. But it's never different. The names change. The technology changes. The narrative changes. But the underlying dynamic, it's always the same. A speculative asset rises rapidly, attracts attention, creates a feedback loop of rising prices and growing excitement until eventually it doesn't. And then the people who got in late, they suffer. You know what the cruelest part of the Bitcoin story is? It's not that people lost money. People lose money in investments all the time. That's part of the game. Sometimes you're wrong. Sometimes the market turns against you. Sometimes you just get unlucky. The cruelest part is that Bitcoin was marketed as a solution to the problems of the common person. Free yourself from the banks. Take control of your own money. This is how regular people fight back against the system. It was sold as populist revolution, as financial freedom for the masses. But what it became was one of the largest wealth transfers from ordinary people to speculators in modern history. Let me explain something about money. Real money, a money that actually works as money, must do three things. It must be a medium of exchange. You can use it to buy things easily. It must be a unit of account. You can price things in it consistently. It must be a store of value. It holds its worth over time. Bitcoin fails at all three. A medium of exchange, let me tell you a story. In 2013, someone bought 2 pizzas with Bitcoin. They paid $10 in Bitcoin. At the time, that was about 4D. Today, those 10,000 Bitcoin would be worth hundreds of millions of dollars. Those pizzas, they're now famous as the most expensive meal in history. But here's the question nobody asks. Why would anyone ever spend Bitcoin if this could happen? If there's even a chance, even a small possibility, that what you're spending today might be worth 1,000 times more tomorrow, you won't spend it. You'll hoard it. You'll hold it. You'll treat it like an investment, not money. And that's exactly what happened. Nobody uses Bitcoin to buy things. Oh, they say they do. The enthusiasts point to merchants that accept Bitcoin. But look at the actual data. Almost nobody is using it for transactions. People are holding it, hoping the price goes up so they can sell it for dollars. Think about that. The thing that's supposed to replace dollars is only valuable because you can exchange it for dollars. Real currency, it circulates. You earn dollars. You spend dollars. You receive dollars. The velocity of money, the speed at which it changes hands, that's what makes it useful as currency. But Bitcoin, it sits in digital wallets, hoarded, unspent, because everyone believes or hopes that tomorrow it will be worth more. That's not a currency. That's a collectible. And you can't run an economy on collectibles. To a unit of account, here's another problem. Imagine you run a business. You sell products. You pay employees. You have expenses and revenues. And you decide, I'm going to do all my accounting in Bitcoin. How do you plan? How do you budget? Today, your product costs 0.01 Bitcoin. Next week, because Bitcoin's price moved 15%, it costs a quantity one Bitcoin. Your employee agreed to work for 0.5 Bitcoin per month. But Bitcoin's price dropped 20%. So now their paycheck is worth 20% less in terms of what they can actually buy. How do they pay their rent? Their rent is in dollars. How do they buy food? Food is priced in dollars. They have to convert constantly from Bitcoin to dollars, which means Bitcoin isn't really their unit of account. Dollars are. Bitcoin is just an intermediary step, an unnecessary complication. This is why, despite all the hype, you don't see businesses actually operating in Bitcoin. They accept it, sure, but they immediately convert it to dollars. Because they can't run a business on an asset that fluctuates wildly in value every single day. Real money needs to be stable enough that you can make plans, that you can sign contracts denominated in it, that you can set prices and have them mean something next week. Bitcoin, it's too volatile, too unpredictable, too unstable. It fails as a unit of account. Two's a store of value now. This is the one where Bitcoin advocates fight back the hardest. Bitcoin is digital gold, they say. It's a store of value. Let me tell you about stores of value. Gold has been a store of value for thousands of years. Why? Not because it's shiny, not because people decided it was valuable, but because it has unique physical properties that made it useful across cultures and throughout history. It doesn't corrode. It's easily divisible. It's rare but not too rare. It's recognizable. And most importantly, it has held its value across millennia. If you buried gold in 100 BC and dug it up today, it would still be valuable, not because of speculation, but because of fundamental human demand for its properties. Bitcoin, it's been around 15 years. 15 years. And in those 15 years, it's gone from pennies to 60,000 to 115,000 to 60,000 again. If you bought at the wrong time, you lost 75% of your value. If you needed to access your store of value during that 75% drop, you were destroyed. That's not a store of value. That's a roller coaster. To a real store of value, it's boring. It doesn't triple in a year. But it also doesn't lose 70% in a year. It steadily, reliably maintains purchasing power over time. Gold does this. Real estate does this. Productive businesses do this. Bitcoin, it's pure speculation. The price goes up when more people want to buy than sell. The price goes down when more people want to sell than buy. There's no underlying productivity, no cash flow, no dividends, no rent, no inherent value, just what the next person will pay. Let me tell you about a conversation I had with a Bitcoin enthusiast. He was explaining to me why Bitcoin was superior to the dollar. The government can just print more dollars, he said. That's inflation. That's theft. But Bitcoin, there will only ever be 21 million Bitcoin. It's scarce. That's what gives it value. I asked him a simple question. If I create a new cryptocurrency tomorrow, and I decree that there will only ever be 100 coins, is it automatically valuable? He paused. Well, no, it needs adoption. People need to want it exactly, I said. So it's not scarcity that creates value. It's demand. And demand for Bitcoin, what drives it? He thought about it. People believe it will be worth more in the future. So the value is entirely based on the belief that someone else will pay more later. Less, but that's true of anything. No, I said, that's not true of productive assets. Let me explain this clearly, because it's the heart of everything. When you buy a share of Coca-Cola, you own a piece of a business. That business sells products. It generates revenue. It makes profit. Whether the stock price goes up or down, the business is creating value. It's paying you dividends from its profits. Your return doesn't depend solely on what someone else will pay for your shares. It depends on the productivity of the business itself. 2, when you buy a rental property, you own a physical asset. People need housing. They pay you rent. Whether the property value goes up or down, you're collecting cash flow. Your return doesn't depend solely on finding a buyer who will pay more. It depends on the fundamental demand for shelter. But Bitcoin, it produces nothing. It generates no cash flow. It pays no dividends. The only way you make money is if someone pays you more than you paid. That's not investing. That's speculation. And speculation over the long run is a losing game for most people. No, let me address the argument I hear constantly. But the dollar is losing value because of inflation. We need an alternative. This is true. Inflation is real. The purchasing power of the dollar does decline over time. But the solution isn't Bitcoin. The solution is to own productive assets that appreciate faster than inflation, businesses that can raise prices, real estate that increases in value, stocks that grow dividends. These are inflation hedges, real ones, proven ones, not speculative digital tokens that might go up or might crash 80%. Let me tell you about a man I knew who was terrified of inflation. He read all the doom and gloom predictions. He believed the dollar was going to collapse. So in 2021, he took $200,000, his entire retirement savings, and put it in Bitcoin. This is how I protect myself from the collapsing dollar, he told me. Bitcoin was at $60,000 when he bought. By 2022, it had fallen to $16,000. His $200,000 was now worth $53,000. He lost 74% of his purchasing power, trying to protect his purchasing power. Meanwhile, if he'd put that money in a diversified portfolio of stocks, yes, it would have gone down in 2022. The market was rough, but by 2024, it would have recovered. It would be worth more than he started with. He would have been fine. Instead, he bet everything on a speculative asset and lost. This is what I tried to warn people about. Not because I hate Bitcoin, not because I'm against change, but because I understand risk. And putting your life savings into something that can drop 75% in value, something that produces no income, something whose value depends entirely on finding someone else who believes in it more than you do, that's not protecting yourself. That's gambling. Here's what the Bitcoin advocates never tell you about the environmental cost. Bitcoin mining, the process of creating new Bitcoin and validating transactions, uses more electricity than entire countries. The amount of energy wasted to produce something with no intrinsic value is staggering. And who pays for that? Society, through higher energy costs, through environmental damage, all so that speculators can trade digital tokens back and forth. Is that really the future we want? They don't tell you about the criminal use. Yes, every currency can be used for illegal activity, but Bitcoin, with its pseudo-anonymous nature, has become the preferred currency of ransomware attacks, illegal marketplaces, money laundering. The very features that make it free from government control also make it ideal for crime. Is that really a selling point? They don't tell you about the concentration of ownership. For something that was supposed to democratize finance, a tiny percentage of wallets control the vast majority of Bitcoin. The early adopters, the miners, the exchanges, they have enormous power to manipulate the market. They can create artificial scarcity. They can time their sales to maximize panic. The little guy, the person buying Bitcoin on their phone, thinking they're part of a revolution, they're the ones getting played. And they certainly don't tell you about the psychological toll. I've watched people become obsessed with Bitcoin, checking the price every hour, unable to sleep because the market never closes. Their mood, their relationships, their mental health, all tied to the fluctuations of a digital token. Some call it investing. I call it self-inflicted torture. Real investing, it's peaceful. You buy quality assets, you hold them for decades. You collect dividends. You sleep well. You don't check prices every day because you don't need to. You trust that productive businesses, over time, will create value. And they do, every time. Let me tell you about two investors I knew. Both started with $100,000 in 2015. Investor A put it all in Bitcoin when it was around 300. Investor B put it in a boring index fund. By 2017, Investor A's Bitcoin was worth $6 million. $6 million from $100,000 in 2 years. He felt like a genius. He bought a house. He told everyone who would listen about the Bitcoin revolution. Investor B's index fund was worth about $140,000. He felt like he'd missed out, like he was stupid for not buying Bitcoin. But then 2018 came. Bitcoin crashed to $3,000. Investor A's $6 million became $100 million, still more than he started with. But he'd already spent $2 million on the house and lifestyle. He was now worth less than his original investment, and he had a mortgage to pay. He panic sold. He ended up with $800,000 after taxes. Better than nothing, but devastating compared to what he'd had. To Investor B just kept investing, kept buying the index fund every month through 2020, through 2022. By 2024, his account was worth $420,000. He'd more than quadrupled his money. He slept well every night. He never once checked his portfolio in a panic. He just trusted the process. Two now. Investor A will tell you he did fine. He still made money. But he'll never tell you about the stress, the fear, the regret, the feeling of watching millions disappear, the nights he couldn't sleep, the relationships that suffered because he was consumed by watching prices. And he'll never get back those years of peace he sacrificed at the altar of speculation. This is what I mean when I say I warned you. Not about Bitcoin going to zero. Maybe it never will. But about the cost, the true cost of chasing speculative manias. The cost in peace of mind, the cost in time, the cost in opportunity, the cost in what you could have built if you'd just been patient. To the hardest truth about wealth, the one nobody wants to hear, is this getting rich slowly is the only way to get rich reliably. I know, it doesn't sound inspiring. It won't get clicks, it won't go viral, but it's the truth. And if you're willing to accept that truth, if you're willing to trade excitement for certainty, drama for peace, gambling for investing, then what I'm about to share with you will change your life. Let me tell you about the difference between speculation and investment. It's simple, elegant, and once you understand it, you'll never be fooled again. An investment is something you buy because of what it produces. A speculation is something you buy because of what you hope someone else will pay for it. That's it. That's the entire distinction. When I buy stock in a utility company that pays a 5% dividend, I'm buying it for what it produces. Cash flow, income, real money that hits my account every quarter. If the stock price goes up, wonderful. That's a bonus. If the stock price goes down, I don't care. I'm still getting my dividends. I'm investing. When someone buys Bitcoin, they're not buying it for what it produces, because it produces nothing. They're buying it because they hope, they believe, They pray that someone else will pay more for it tomorrow. That's speculation. And speculation, it's not inherently evil, it's not immoral, but it's gambling. And gambling, over time, favors the house, not the gambler. Here's what I've learned in over 70 years of building wealth. Real wealth comes from owning productive assets and giving them time to compound. That's it. That's the secret. There's no shortcut. There's no hack. There's no magic formula. Just own good businesses and wait. Let me give you a framework, a way to think about investing that will serve you for the rest of your life. I call it the 4 pillars of real wealth. Pillar 1, own businesses. Not bets at every dollar you invest should buy you ownership in something that produces value. A company that makes products people need. A property that provides housing. A business that generates cash flow. Something real, something productive, something that creates value in the world. Let me tell you about a woman, we'll call her Eleanor. Eleanor was a school teacher. Made $45,000 a year her entire career. Never got rich. Never had a windfall. Just her salary and her pension. But Eleanor understood something profound. She understood that businesses create wealth. So starting at age 25, she invested $300 a month. Not in Bitcoin, not in gold, not in whatever was exciting that year, in boring businesses. Procter & Gamble, Johnson & Johnson Waste Management, utilities, banks, companies that sold soap and medicine and collected garbage and provided electricity. Boring, unsexy, profitable. She did this for 40 years, through the crash of 1987, through the dot-com bubble, through 2008, through COVID. She never stopped, never sold, never panicked. She just kept buying businesses. And those businesses, they kept producing. They sold products, they earned profits, they paid dividends. And Eleanor reinvested those dividends to buy more shares. When Eleanor retired at 65, her $300 a month investment on 44 on total invested over 40 years had grown to $1.8 million from a school teacher's salary. No lottery tickets, no Bitcoin, no get-rich-quick schemes, just owning businesses and waiting. And here's the beautiful part, that $1.8 million was generating 75 zalozens a year in dividends. More than she ever made working. She didn't need to sell a single share. She lived off the dividends, traveled, helped her grandchildren, gave to charity. And when she died at 92, her portfolio was worth $4.2 million. All of it going to her family and causes she cared about. From $300 a month buying boring businesses. Pillar 2, think in decades, not days' time, is the secret ingredient that turns ordinary returns into extraordinary wealth. But most people, they don't have the patience. They want results now, this year, this month. And that impatience, it destroys them. Let me show you something that will blow your mind. If you invested $10,000 today at 8% annual return, in 10 years it's worth $21,589. Nice, you've doubled your money. 46, 610. In 30 years, 1 on 100, 627. You've turned 10,000 into 100,000 by doing nothing except waiting. In 40 years, it was 17,245. In 50 years, 469,016. The same 10,000 left alone becomes nearly $500,000. That's the power of compound interest. Einstein allegedly called it the 8th wonder of the world. And he was right. But here's the catch. Compound interest needs time. You can't rush it. You can't force it. You can't hack it. You can only give it time and let it work. This is why Bitcoin is so seductive, because it promises to compress decades of compound growth into months. Why wait 40 years to turn in 10,000 and into 500 zalozin when Bitcoin could do it in 2 years? And sometimes, rarely, it does. But far more often, it does the opposite. It turns 10,000 into 3,000, and you've lost not just the money, but the time. The irreplaceable, unrecoverable time. I've watched young people waste their 20s and 30s chasing quick wealth, jumping from one speculative asset to another, crypto, NFTs, meme stocks, whatever's hot, and they end up at 40 with nothing. No wealth, no compounding, no foundation, just a series of losses and a decade of wasted time. Meanwhile, their boring friends who just bought index funds at age 25, they're millionaires by 45. Not because they were smarter, not because they worked harder, because they understood that time, patient, boring, relentless time, is the most powerful force in wealth building. Pillar 3, embrace boredom as a strategy. This is the hardest pillar for most people, because we're wired for excitement, for novelty, for stimulation. The idea of doing the same thing year after year, decade after decade. It feels wrong. It feels like we're missing out. But in investing, boredom is a feature, not a bug. The most successful investors I know, their portfolios are boring. Index funds, blue chip dividend stocks, bonds, real estate. They don't check prices every day. They don't trade frequently. They don't have exciting stories to tell at parties. But they're wealthy, extraordinarily wealthy, because they learned to embrace boredom. Let me tell you about a man, we'll call him Thomas. Thomas started investing in his 20s. He set up automatic investments into 3 index funds, total stock market, international stocks, bond 63/10 allocation. He rebalanced once a year. That was his entire strategy. For 30 years, Thomas never changed anything. He didn't try to time the market. He didn't chase hot stocks. He didn't panic during crashes. He just let the system work. Automatic investments every month, same funds. Rebalance annually. Boring. By age 55, Thomas was worth $3.2 million. He'd never picked a stock, never timed a trade, never had a win to brag about. He just consistently, boringly, methodically invested in diversified funds. And he got rich. Compare that to his college roommate. We'll call him Mark. Mark was always doing something, trading stocks, flipping properties, investing in startups, buying Bitcoin. He had exciting stories. He made big wins sometimes. And he had big losses. At age 55, Mark was worth about $400,000, not poor, but nowhere near Thomas. Because excitement, activity, clever moves, they don't compound. Boring consistency compounds. Tour's Pillar 4, never bet what you can't afford to lose. This is the rule that if you follow it, makes it almost impossible to be financially destroyed. Never ever invest money you need. Not money you need this year. Not money you need in 5 years. Only invest money you won't touch for at least a decade. 2, here's why this matters. When you invest money you can't afford to lose on, you make emotional decisions. The market drops 20% and you panic because you need that money, so you sell, you lock in losses. You destroy your long-term returns. But when you invest money you don't need, you can weather any storm. Market crashes, you hold. Bitcoin drops 7%, you don't care because you didn't have any Bitcoin. You invested in productive assets with money you won't touch for decades. I've seen so many people violate this rule. They take their emergency fund and invest it. They take their house down payment and speculate with it. They take their retirement savings and gamble it on Bitcoin. And when life happens, when the car breaks down, when they lose their job, when medical bills arrive, they're forced to sell at exactly the wrong time. This is why I always say, before you invest a single dollar, you need 6 months of living expenses in cash. Boring cash in a savings account, earning almost nothing. That money, it's your foundation, your security, your peace of mind. Only after that's in place, then you invest. With money you won't need. Money you can afford to lose. And suddenly investing becomes peaceful instead of terrifying. Now let me tell you what all of this adds up to. The person who follows these 4 pillars. Who owns businesses instead of bets? Who thinks in decades instead of days? Who embraces boredom as strategy? Who never bets what they can't afford to lose? That person slowly, quietly, without drama or excitement, becomes wealthy. Not overnight, not in a year, not even in 5 years. But over 20, 30, 40 years, they build extraordinary wealth. 2, in the person who chases Bitcoin, and the next Bitcoin, and the thing after that, they spend their entire lives searching for the shortcut. And they end up nowhere, still searching, still hoping, still believing the next thing will be different. While the boring investor, they're already there, already wealthy, already secure, already at peace. Let me tell you what I wish I could make everyone understand. The reason I warned you about Bitcoin, it wasn't because I hate Bitcoin specifically. It's because I hate watching people destroy their financial futures chasing illusions. I've seen it too many times. Different assets, different stories. Same outcome. People gambling away their chance at real wealth because real wealth feels too slow. And here's what breaks my heart. Real wealth isn't slow. Yes, it takes time, but so does everything worthwhile. And along the way, you sleep well. You have peace. You don't check prices obsessively. You live your life while your investments quietly grow. That's not slow. That's efficient. 2, chasing Bitcoin, chasing speculative manias. That's slow, because you spend years, decades, jumping from one thing to another, always starting over, always looking for the next opportunity, never building, never compounding, never arriving. 30 years later, you're still searching. While the person who just bought index funds 30 years ago, they're retired, wealthy, done. Who was really slow? So when I say I warned you about Bitcoin, I'm not gloating. I'm not saying, I told you so. I'm saying, please learn from this. Not just about Bitcoin, about all of it. About the eternal temptation to get rich quickly. About the seductive lies that every generation faces in new forms. About the truth that never changes. Real wealth comes from patient accumulation of productive assets over decades. That's it. That's always been it. That's always going to be it. The world will keep producing new Bitcoins. New revolutionary assets that promise to change everything. New ways to get rich quick without the boring work of building wealth. And every generation, there will be people who fall for it, who mortgage their homes, who drain their retirement accounts, who bet everything, and most of them they'll lose. But you don't have to be one of them. You can choose the boring path, the proven path, the path that's worked for everyone who's ever followed it with discipline and patience. Buy productive assets, reinvest the dividends. Wait, that's it. To 40 years from now, the people who bought Bitcoin in 2024, most of them will have nothing to show for it. A few will have gotten lucky, but most will have lost. But the people who bought index funds in 2024, who invested $500 a month into boring businesses, who never checked prices obsessively, who just trusted the process, they'll be millionaires, every single one of them. Not because they were smarter, not because they worked harder, because they rejected the siren song of quick wealth and embraced the boring certainty of compound growth. So yes, I warned you about Bitcoin, and I'm warning you now about whatever comes next, about the next revolutionary asset, about the next can't-miss opportunity, about the next promise of wealth without patience. Don't fall for it. Just buy businesses. And wait, it's boring, it works. And that's all that matters.